Gather round. It's time for your Real Estate Chalk Talk with the Hittner Group. Listen closely as your coaches discuss the culture, the economy, and the political scene, and how it affects your home and your real estate investments. Real Estate Chalk Talk is where you learn the science of buying and selling real estate and the art of living in your home. Your education begins in 5, 4, 3, 2, 1.
Same, actually, as the last year of Sanity, 2019. So we had 5,800 homes on the market back in 2019, and today we have 5,500 homes on the market, down about 283 homes. We are at about the same level. Let me just look here, just double checking. Actually, we're up a little bit from 25, up about 500. So we've got about 3% increase in inventory on the market, so that's good. Here's something that I noticed. By the way, Keith Jr. is gone for this. He's in St. John's vacationing, so he's out for this week. Brittany's sitting in his place from Great North Title. All right, days on market. That's what's surprising to me. Days on market, 52.
Ooh, I was going to say 51.
Yep.
Surprising.
52 days
that
on
went up
market.
from last week and the last quarter, maybe?
Yeah, it's up. And here's the thing. Those are new pendings that are those. So in other words, those are the ones that went this week.
That makes sense, though, because you were in the holiday season, right? So things probably slowed down, but they left them on the market. Now everything's getting back going.
That's right. That's a good point.
And now they're like buying. They're going, well, yeah, but they had Christmas in there. Maybe that's the 51 days?
Well, but yes.
Right.
But what I'm saying is that the old properties that didn't sell are not the new pendings, because the new pendings, a lot of them tend to be stuff that came on the market, and it was just like people, that's just what I've been waiting for, so they sell quick.
Yep.
So the things that come on the market and sell quick tend to drive that days on market number
for
down,
sure.
that average down. So the ones that are left on the market are much longer than that. So, and that's where I'm getting at. So you have on the properties that are still on market, you're looking at 80 days, 60 days, 80 days, longer days on market.
That feels really long, doesn't
Yeah.
it? It's not historically, but it feels really long, right?
90 is a good number to me. 90 days on market, that's a good number. Gives you adequate time to correctly market the property, to do your photos, to do your few open houses, to present it nicely to the marketplace. And then you've always got your 40-day cycle to close, so that's going to just kind of tag on the end of that.
40 days.
Yeah.
Every realtor now is like, I'd like to get this done 2 weeks.
Well, sure they would.
2 to 3 weeks, and we can do it.
Yeah.
So that's.
It's getting the appraiser out there is the main thing. You have to get through some of the inspection period. You have to get through, if it's an association, you got to get that 10-day period in there. And then no one wants to order the association docs until they've got a PA on the table, because they'll time out. Otherwise, we had one this week that timed out.
What do you mean timed out?
Well, they're 90 days. The docs are good for 90 days, the resale disclosure.
Okay.
And after 90 days, you got to get a new one.
So,
and that's where I'm sitting right now, waiting for. I've got all the docs. Nothing's changed.
okay.
I'm waiting for the new resale disclosure. And of course, then they charge again for it.
Right.
All of that. Anyhow, 52 days on the market. New solds this week, 436. Last week is 455. That's actually softened up in a minute.
Think the market will soften up a little bit right now, or do you think
So,
it will start?
No.
It'll start because you just said softened up there a little bit.
Well,
I'm kind of surprised because the first week of the year I would think it would be softer than. I think we would start ramping up, right?
Well, the new solds are closings.
Okay.
So
true.
Not new pendings, new close. So the number that closed this week is down just a touch. I mean, it's hardly worth talking.
What are you
about.
seeing at the title company? Are you pretty busy right
for
now?
orders coming in?
We just started seeing an uptick on Monday.
Good.
Yeah.
Okay.
Yeah, I think 20 because for a couple reasons. First of all, we got inventory is up a little bit. We've got interest rates that are really, and you'll talk about more obviously, but interest rates are good. I think they're good. So you're in the low sixes. You can get something with a 5 in front of it without too much trouble, unless you got a horrible credit.
Right.
That's decent.
Really decent.
So that opens the door for a lot of people who at 7.5% didn't qualify.
Oh, for sure.
Or qualified for a home they didn't want to buy, which is more the case. They're trying to move up, and then at 7.5%, it's like, well, I can't, But now at 6%,
Mm-hmm.
or at 5.99, they can make it happen. Yep. So, and then days on market or absorption rate. We're running about 2 months, which is just curious to me because that's technically still a seller's market, but the market is performing like a balanced market because we've got virtually every offer that comes in is coming in with hair on it. No, I wouldn't say hair on it, but there's an ask.
There's an ask. Yep.
There's some kind of an ask. So they're asking for closing costs. They're asking for repairs. They're asking for a little price something. They're asking for stuff. And sellers are saying, no, we won't give you that, but we'll give you this. And so there's that back and forth, which is, to me, a normal marketplace where you've got people negotiating, and at the end of the day, the papers get signed and both parties are accepting of the offer. That's an arm's length transaction.
Is it what's the percentage of list price that's getting
it's
closed?
In the high 90s.
High 90s.
Yeah.
Okay.
Yeah.
That's good, right?
Well,
remember it was 100%, 100 plus,
100,
right?
Yeah, 100 plus a few years ago, but now it's high 90s, which is still very good.
Yep.
Yeah. And people are being a little bit more thoughtful, I think, about their pricing. I mean, you got to be careful that you don't get over your skis too much because there is more inventory. There are more options. Talk about pricing. We had Coffee Clutch the other day. We were talking about lifestyle. I got 3 properties that are perfect examples of lifestyle. One is it's coming on the market next month. Got the paperwork all signed up and they're getting ready. And it is a 12-acre equestrian facility. So 12 acres, indoor riding arena, 3 box stalls, beautiful, beautiful home, completely updated, gorgeous. Swimming pool, in-ground pool, beautiful brand new in-ground play set for kids or grandkids. It's got a lovely room on the side of the thing overlooking the paddock and all that it would be a wonderful cool. Some of the owners, previous owners, used it for not daycare, homeschool.
Oh, really?
Or you could run business out of there. I mean, just wonderful. Another pole barn that's heated with airport door on it that opens up to the grounds. I mean, it's just a wonderful. It's $1,885,000.
Wow.
All right, for that property, and that's coming on the. So if you're looking for something like that, and you're in that, but that's a lifestyle that you're doing. And when you do the flyover on the property, you look at that. I mean, it's just like wow. What a life to be.
Boy, what a fun drone
yes, and
thing that's going to be for you, right?
Yeah, and I talked to the photographer about that. We'll be on site for that shoot.
Yep.
Then another one now that we signed up this week is a townhouse in Burnsville, $300,000. It's in the Burnhamwood development. So there is a gorgeous development, walking trails, woods, community center, pickleball court, tennis court, swimming pool, and it's a Rambler. So it's a Rambler townhome with a basement, 2-car garage, great big deck. That's a lifestyle for someone in their, to me.
Either early or late, right?
Yeah, it's either going to be a younger couple would be perfect, or someone in their like 50 plus where the kids are gone, but they're still very active. They're really community oriented. They want to get together and have connectivity and be able to walk around. I mean, that's another, lifestyle for sure. And then we have another property in Lakeville on Exania that is a traditional 4-bedroom up 2-story with a 4-season porch, nice backyard, fenced yard, close to schools, close, that 30-something with kids, kind of a child rearing deal. Beautiful home, brick front, gorgeous, majestic when you pull up. That's that life too.
Yep.
And it's funny because I look at properties like that and say, who's going to live here?
Yep. Right.
And what kind of activities they do and what life do they live and what do they want to accomplish? And you can pretty much pin it on just about every property and figure out who it is. And of course, you're always surprised.
Right.
You have a big 2-story like that, and you'll get this old codger like me will buy it just because he likes the look of it and lives there. But that's what's coming on the market, and there's a lot of them. We have quite a bit in the pipeline now coming up. We're going to have
that's exciting.
Yeah, we're going to have a very, very busy 2026. So if you're thinking of making a move, even ours sometime this spring, give us a ring-a-ling-a-ling. 612-627-8000, 612-627-8000, or another lifestyle choice if you're getting divorced and you're looking to split and you got to liquidate some assets and maybe move on with your life. We're experts at helping with that too. Get you into talk with Calvin, get qualified, and we'll move you forward so you can live the rest of your life in peace. 612-627-8000, HittnerGroup.com, HITTNER Group.com. We'll see you right after the break. Hey, welcome back to the show. This is your Real Estate Chalk Talk with the Hittner Group. HittnerGroup.com, 612-627-8000. Brittany's in the studio. I'm going to talk a little bit of title here. Okay, talk about, we were talking at break. We got so much stuff to talk about. I don't know how to begin. I just know that it's gonna roll out. At Coffee Clutch the other day, we were talking about, I don't know why I keep thinking about this. We were talking about changing ownership. Mm-hmm. And how that impacts your homesteading. Mm-hmm. So tell us about that, because that surprised me. I didn't realize this.
Yes. So actually, when you change how you're entitled, anytime a deed is transferring ownership, your homestead status will reset with the county. So the following year would actually go non-homestead, even if you're just quit claiming from yourselves to yourselves as joint tenants. You will still need to re-homestead your property by the end of the year, December 31st.
So here's why that's important, because I've had this happen a number of times. You've got somebody that buys the house in their name because they're the only ones working, and so they qualify, so they just do everything in their name. And we've always thought, well, it doesn't matter because you've got marital interest on the property. It's like you're protected anyhow. But then people say, no, I want to be on the deed. Mm-hmm. I want to be on the deed.
Right.
All right. So we said, well, no problem. We'll just close it up, and then right after we're done, we'll do another deed, do a quitclaim deed, and they'll be all good. Mm-hmm. Okay, sometimes that happens immediately. Sometimes we're advised to wait till the first one is recorded, and then we'll come back in 30 days, and then you can get the spouse or the other person on the deed. Okay, that triggers something. And that triggers that non-homestead status.
Right. So if they've homesteaded right after the warranty deed is recorded,
right,
then once that quitclaim deed is recorded, then it goes non-homestead again.
So and your counsel people at the closing to file for homestead. Mm-hmm. So they probably did it that day.
Yep.
And now 30 days later, when they do the quitclaim deed, they're going to have to do it again. Mm-hmm. Mm. So otherwise,
boy, that'd be an area that you could really slip on, right?
You could.
I don't even think about it.
I don't think anyone even knows it.
I know.
Very few people know that triggers a non-homestead.
This is like a public service announcement.
It is a PA. Mm-hmm. So here's another one, which is very common. People doing estate planning, and so now they're saying, okay, we got to transfer the house into the trust. Mm-hmm. That also triggers it.
Correct.
So now.
Triggers what? Triggers that
non-homestead.
Non-homestead. If I move my home into a TOD, which I want to ask you what that is.
Not a TOD, but a trust.
I thought it was a transfer
There's
upon
two ways to get it in there.
Okay.
So one of them is I'm just transferring the property into the trust. Okay. So you do a deed, right? Mm-hmm. So how would you go about doing that?
You would quit claim from you and your spouse, if any, to the trust.
Okay.
And then after that's recorded, you will want to take that copy and then homestead the property for the following tax year.
Because otherwise you go to non-homestead.
Right.
Mm-hmm.
Is there a big difference in my taxes if it's homestead or non-homestead?
Nowadays, it's maybe $100, $200, maybe $300. If it's a duplex, it's a bigger difference, but not so much as it used to be.
Not currently, mm-hmm. but previously, pre-Jesse Ventura, there was a huge difference because the non-homestead status was reserved for investment income producing properties, and it's Minnesota. So anytime there's income produced, they want their pound of flesh. And so then there was a pretty significant difference between homestead and non-homestead portion. Think about this now with a state that has blown through and wasted $18 billion. Mm-hmm. They need to make up that revenue. When they changed that homestead, non-homestead mill rate, they didn't get rid of the category. They just lowered the mill rate for the non-homestead portion. So do you think that might be going up soon?
I think everything is going to go up soon.
Yeah.
Question, is there a home value where there's no difference between homestead or non-homestead? Like if the value of my home is, if I'm Keith, right, and I have a big home and it's worth like $1 gazillion, is there something there, or is it?
Yes, there is a cap.
Okay.
As far as what you'll receive for a credit, I think the number is $420,000 now. They may
The
have just
value of the
updated.
home,
Mm-hmm.
and is that the tax assessed value or just what? Yeah, it'd have
That'd
to
be
go
a
off
tax
of
assessed value.
tax.
Correct.
So if my tax assessed value is over 425-ish,
I think it's 420. It might be
in that range,
417
yeah.
now.
So if it's over that, then there's no differentiation between homestead or non-homestead, right?
Correct. Yep.
Okay.
But there are additional levels of protection, so you still want to homestead your property
Okay.
if it is your primary residence.
That doesn't make sense to me. What makes sense to me is the other way, so that if properties with values under mid 400s would be taxed the same, very little delta between homestead and then once the value goes up and it's non-homesteaded, it's more likely that is some kind of a investment type or commercial type property. So you think that's when the state is going to want to grab it. You know what I mean?
Yeah, I totally get what
It kind
you're
of
saying.
seems backwards
Yeah.
to me.
Well, I'm sure someone would take that call. You know.
Yeah.
Yeah.
Like,
There
oh,
may be some other tax benefits when you
Yeah.
file your M1 PR, but not as far as the property taxes
Okay.
that you're paying.
got it.
The other thing about that I was thinking about is in the last segment we talked about lifestyle properties and the difference between how someone would go about, or if there is no difference between different properties, if they're hobby farms, if they're farms, if they're rural properties, if they're urban properties, duplexes, or you're living in one house, is in terms of title work and title searches and title insurance, is there a difference there?
As far as insurance coverage, yes. I mean, it depends on what the property use is.
So it's based on value or usage?
You're saying the premium?
The title insurance premium.
Okay.
Yeah.
So the premium is based on the value.
Okay, so it's straight value. Okay. The other thing that we mentioned the other day is that when you transfer that property into a trust, the title insurance may not go with it.
You want to confirm with your title company that your insurance policy will remain effective.
Similar to homeowners insurance.
Mm-hmm.
I mean, if you transfer your homeowners insurance, or I'm sorry,
Transfer your home.
your home into another entity, it's technically owned by someone else, and so your homeowners insurance then would not cover it. May not cover it.
Yeah.
Let me leave myself an out there,
Right. Yeah.
but may not cover it.
Correct.
And trust me, if a great big claim came up and you
They'll
had transferred
find-
it,
yeah.
they would weasel out of that deal.
Have you moved your house into a trust?
I have my will set up as a TOD, transfer on death deed.
Transfer on death. Can you just talk
Yeah.
about that for just a minute?
Just
and then how
okay,
does
so
that- yeah.
transfer and death. So then here we go. So we kick the bucket, die in a plane crash.
You or
Me
you
and Sheila.
both
Yeah,
of you.
right? It has to be both of us because if one dies, the other one's just going to get the house.
Okay.
The
Nothing.
way we have it set, nothing moves.
Okay.
right?
Because you are entitled
'Cause we're
as
joint
joint tenants
tenants,
right now, right of survivorship.
right.
Okay.
So if something happens to either one of you, the survivor still has automatic interest in the property. Probate would not be recorded.
Right.
But then once the last owner passes away, that is when
That
the
triggers the
transfer
time.
on death deed will go
So
into
then it's
effect.
just like automatic. It goes. You have to record it,
Okay.
But you've got the paperwork. Everybody's dead. Now it gets transferred into the trust. So the trustee now has to record that. Well, at that point, two people have to be notified. One of them is your owner's policy of your title insurance.
Okay.
And if you want continued coverage, there might be a premium
Okay.
to do that, or maybe it will transfer
Once you're both dead.
once you're both dead. Once a
Okay.
TOD is triggered.
Okay.
And then now that's recorded and the property's in the trust. Now you now have to contact your homeowner's insurance because the property is actually owned by another entity,
Okay.
the trust. And that work is done by the trustee.
Okay.
Yeah.
What's really important with the transfer on death deed is that is recorded with the county
Yeah.
prior to death. Otherwise,
Yes.
it is invalid.
Okay. Okay. So when I set this stuff up, because Key already did that.
Mm-hmm.
So once you did that, you let title know, or how did you?
No, the county. Our
County.
attorney recorded it with the county.
Okay.
Yeah, she records it.
Okay.
She should for what she charged. We talked about old joint tenants, which was explain that one too, because this was a real surprise to me.
Yes.
Old joint tenants.
Mhm.
Okay.
the deeds from back in the 70s, maybe 80s as well. So if you want to take a look at a deed from maybe your parents that purchased a property in the 70s, take a look at that, pull it out and see if it says joint tenants after their names as grantees. If it does not say it afterwards or in some specific verbiage down below the legal description, if it does not reference joint tenants, then they are considered tenants in common. Tenants in common means that probate would be recorded upon the passing of one or the other.
Because what that means is that each person owns half of that asset,
Yep.
right? So I was thinking about that, so I went and actually looked at some of them, and it does say at the end, John and Sue Smith as joint tenants.
That's what you want to see.
Yeah.
If it says husband and wife, that's not good enough.
Not good
That's
enough.
tenants in
Yeah.
common.
And sometimes it says as tenants in common too.
Yeah.
But it will say as joint tenants, and if it doesn't, then it defaults to tenants in common. And what made me think about it is I get probate requests, and I'll see a probate going through with a surviving spouse, and it's like, that was recorded incorrectly.
Wow.
Okay, this is your Real Estate Chalk Talk with the Hittner Group, 612-627-8000, 612-627-8000. We'll be right back. Hey there, welcome back to the program. Thanks for sticking around. This is your Real Estate Chalk Talk with the Hittner Group, hittnergroup.com, Hittner Group.com. We're speaking with Brittany, Great North Title, and when we went out to break, our last segment, we were talking about having deeds and having the correct verbiage on the deed so that it transfers correctly and you don't wind yourself in probate. On our purchase agreements, we've got all kinds of different categories of deeds that we got warranty deed, we got the personal rep deed, we got this deed and that deed.
Trustees deed.
What are the different kinds of deeds and why is that important?
So a warranty deed will transfer from individuals.
Okay.
So if you have ownership as yourself or a joint tenant or tenants in common, that would be a warranty deed.
Okay.
A trustee's deed would be if you were entitled as a trust, you would be transferring as an entity.
Okay.
The trust to the buyers.
Okay.
And then an estate deed or probate deed would be if the owner has passed away and it's gone through probate. Now a personal representative has been appointed to sign on behalf of the estate.
Okay.
And so really the estate is just transferring title to the buyer.
And we call that a personal rep deed. What's a warranty deed?
A warranty deed is transferring from individual ownership. So you are warranting the condition of the property. You live there, you owned it, you have history with the property.
Well, so what kind of a warranty are we giving then?
Just a word, I think.
Huh?
Isn't it? It's not. It's just a word in the. I don't think there's a warranty.
Aren't we warranting the title? I mean,
right,
why do they
you're
call
warranting the ownership of the property.
Okay,
and
so you said you had a worst or a warranty deed. What is that?
Yes, so we had another 1970s deed where the husband had passed away many years before. And as an owner of the property, the elderly woman thought that she was probably entitled as a joint tenant or really didn't know the difference between tenants in common and joint tenants. And unfortunately, this old deed did not state joint tenants after their names as grantees. So what had to happen is she had to go through probate to determine who the other half of the property should go to since her husband passed away.
Wow.
There was no right of survivorship there.
Was there no will? There's no trust. There's nothing.
Correct.
What do you do?
So we have to connect her with a probate attorney and begin that process. And so once that's completed, then we may have to wait 30 days after the judge signs off on that and then get the letters and record the probate documents.
But it's not clear what happens. So
then the 50% is now the estate of the husband.
Okay, but that estate who gets that estate?
That's
what the court determines.
That's what the court determines. So generally,
so now I have to go to court. The court says yes, it goes to my spouse, or it goes to my kids, or it goes to this charity, or it goes to.
Being that if there's no other prevailing documents that govern or direct, like a will, then the state has pecking order, if you will. that says it's going to be this person, this person, this person, this person who inherits if there's nothing else. But they do still have to have a search. They have to do a search to find those other errors, and that's what the attorney would do. They're essentially looking for the other errors because they want to make sure that everybody who knows what someone else has in terms of documentation out there that you've got in the title company, if I understand, you're giving an insurance policy guaranteeing that
Clear title.
that
The
clear
title. Okay.
So, you don't get sloppy about that.
Right. So in this case, there's a deed from her as a single person to the buyer. And then also once probate is complete, then the other 50% is the estate of, and she was then appointed as personal representative of his estate. And so then she had to transfer as 50% estate and 50% herself.
So,
Boy, that's interesting.
yeah, let's back up a little bit now.
Yeah.
So let's say that after he kicked the bucket, and she's now it's 10 years later, and she's doing fine. And they thought, well, we better review our stuff. And they did make this, hopefully they would discover that they've got an issue here. How then would you go about, do you think, making that correction? Would you have to go through the exact same process? Okay.
It just wouldn't be as stressful because
Right.
you don't have a sale.
Because you're being
With a
proactive
deadline.
about it. Yeah, you're being proactive about it. But you're still going to probate that,
Right.
essentially.
Yes.
Why would anybody be tenants in common? Why would I want it to be 50-50?
I'll give you a perfect example.
Okay.
Let's
Thank
just say, because that you were married,
Okay.
and now you build some wealth, whatever it is, and you got divorced,
Okay.
and then you've hooked up with another gal who was married
Okay.
and built up some wealth, and she got divorced. She has kids, you have kids. Now you buy a home together. Okay. So you kick the bucket. If it's tenants in common, she gets everything.
That's joint,
Joint tenants.
That's
Sorry,
joint
if
tenants.
it's
Yeah.
joint tenants, she
Right.
gets everything.
Yeah.
Right? Your kids get nothing. Do you want your children to have some legacy from you? Probably. So that's a case where a lot of them are tenants in common, where it's like, okay, half of this goes to her family. She'll direct it with her will, how her half goes. You got your will that directs how your half goes, and it can go into other assets as well, so that each family that came into the relationship, it came into the thing together, is got some kind of a legacy coming down from you as a couple. So that would be an example of why that would be like that. In other cases, they just say, I don't care, just I want the surviving spouse.
Don't you think most of the time it's a mistake that somebody just made that decision by mistake because it creates this whole probate thing?
I don't know if that's true or not. I know that we see tenants in common a lot. Especially in that scenario. So
The state did revise the deeds where there are actually boxes to be checked now so that it is more clear that you're making a selection. Because before that was an option, you would just have to automatically type in joint tenants after their names. Or if you didn't leave anything, that would just automatically be tenants in common. And I think that is the reason
That's
that
where
people are mostly tenants in common.
Here's what makes another thing that makes it important. Okay, so you're same scenario.
Yep.
You kick the bucket.
Yep.
You've got your heirs, are going to get your inheritance from you.
Yep.
Part of that is 50% ownership in that piece of real estate. They want their money. So they could force a liquidation of that asset, or the surviving spouse has to buy them out. Right.
So
that you can get rid of.
So you need a state in your will or trust, a life estate, saying I can be there until at such time I die, or
That'd be a way
sell
to
the
do it.
property. When I sell the property,
At that
50% of the
point.
proceeds go to the trust.
Yes. Yep. That's exactly right. But those things, that's why you talk to an estate planning or elder care attorney, because that's what they do. And they've seen all this stuff play out 1,000 times. They know exactly what to do. They got forms for it, and make sure that your heirs are protected.
Interesting.
Because the last thing you want to do is have one party or another, get killed in a car crash, and all of a sudden you've got, this storm of conflict between something that may already be not the greatest relationship in the first place, and now you've just made it worse.
Yeah. So what was the end? How did that your war story play out? That when this lady had to do, was it just a time thing she had to go through, or?
Right, time and cost. So she had to contact a probate attorney, go through the whole process, and then in the end be appointed as personal representative of the estate of her husband for the 50% interest. So that could have been avoided had this been something that she was made aware of prior to his passing away. What should everyone do right now? Pull out your deed, make your parents pull out the deed, not just a copy of a deed, but the recorded deed. What is of record at the county? Pull it out and make sure that you are joint tenants or in the name of a trust, or you have your transfer on death deed recorded prior to death.
Where do I find my recorded deed? Because when I close on my property, they go, oh, we'll email this to you or we'll send it to you. I've never, ever received in the mail a deed. I don't know that I've gotten an email with it attached. Where would I
sure
find
that
that?
you did not.
You probably closed at the wrong title company, is my guess.
Don't
but no,
disagree.
you can contact your title company to
But what if they
send
no
you a
longer
free
exist?
copy. If they no longer exist, you could reach out to Great North Title and we could do a quick search for you, or you can call the county yourself. Or you could go down to the county if you want to do it old school and request a copy.
A lot of times, if you go to
Interesting.
online in the county records, like in Dakota County, you can pull up it'll have the CRV, and especially the more recent, older ones, they might not have it.
You can call the recorder's department as well and just ask them if you are joint tenants.
Boy, this is a really important stuff.
Yeah,
isn't
it
It
really
is.
is because
I mean, we kind of blow, and I don't mean this bad, but you kind of blow over this stuff until, quite honestly, we can have a fun. It's a good conversation, not boring.
Right.
You know? So,
Yeah.
and it
actually
really has
super-
real life impact with people, and for their families in moving forward.
Yeah.
And like that, she could easily have lost the buyer there because he was going to wait 60, 90 days. You know, when they say, I need a house, and yours is not the only house, so we're going to go out and look at another house. Now you've lost that buyer. You just got to start all over again. HittnerGroup.com, HITTNER Group.com, GreatNorthTitle.com. And we'll be right back with the Big Money segment. Hey, welcome back. Thanks for staying with us on your Real Estate Chalk Talk. Big Money segment of the program, 651-231-2500. That's for the great rates and the low price from Calvin Kamick, Loan Depot. Super duper low closing costs. Calvin, what's going on in the money world?
A lot going on in the money world, and our segment is sponsored by Flex Property Services. So if you need trash outs, clean outs, anything, junk removal, power washing, give us a call as well, Flex Property Services. So sponsored by them, this segment. Money segment, well, let's wrap up before I get in the money segment. Let's wrap up with title. We were talking last segment about joint tenant, all different types of ownership properties. And if you don't know, like, what's the remedy on figuring some of this stuff out? Like, I don't know how my property is being held right now. What should they do? Should they contact you guys? Do you not want to get inundated with a bunch of calls with people just curious because they don't know what they did?
Yep. I think what's important to know is that we are not real estate attorneys. So we cannot offer legal advice. However, we can pull up property records and help you, attain that information. So I think the best thing is to reach out to your title professional or Great North Title. We can do a search for you, find out how you're in title. Now, let's say you purchased the property as a married person and your spouse is not in title. But now you realize maybe it might be important to your spouse that she be in title or he be in title. And so what you could do at that point is file a quit claim deed that would quit claim from the both of you because there's the marital interest. Even though the spouse is not in title, they still need to deed their interest out.
Okay.
So you'd really be deeding from yourselves, married to each other, to the both of you as joint tenants, and that's where you're going to check that joint tenant box.
So there's a direct line that you can follow through, and it's important to remember your will has nothing to do with it.
Right. That's what you would have to enter into.
See, and I think I've argued that with you.
Yeah. The people think the will is, it says in the will.
I got
It's
in the
like,
will.
they don't care what the will says.
It'll help out in court.
Yeah, the will just directs activity, but you're
it
still
doesn't avoid-
entitled. You're legally entitled as it's entitled, and someone can. I'm willing them my '57 Chevy, and it's like you don't own the '57 Chevy. The '57 Chevy is in your son's name. but it's always been mine, Yeah, but it's not in your name. It's in your son's name. See what I'm saying?
Yep.
All right.
So if they want to contact Great North Title, how would they do that? Just to kind of get some clarity. I'm sure it's not that expensive to probably do some of this stuff. And
Yep, we can do a quick search for you. So I would just
fee.
email info@greatnorthtitle.com.
info@greatnorthtitle.com.
Yep.
All right. Good. Let's get into the money segment here. I just want to touch on a handful of things. So busy week, which is great. A lot of activity, a lot of uncertainty. Whenever there's uncertainty, that's always good for the mortgage market. However, there is some uncertainty as well, saying, given what's happening with some of the economic indicators, they were first saying, hey, 2 rate cuts in 26. Now you have some proponents saying there'll be no rate reductions in 26 and a hike in 27. And
Who's saying that?
Different talking heads right now in our industry. So
that's crazy.
So I think it's crazy just given the political environment that we're in right now. I think there'll be a couple cuts. There'll be
You think the guy that Trump's going to appoint is going to not do a rate cut? That conversation's already been had.
Yeah, I think there's a high likelihood that they're going to try to drive rates down. Now you can do that through, quite honestly, the cuts haven't driven rates down as much as you
not
think.
Housing rates.
Right.
Yeah.
Right, but the Fed funds rate. So we'll see. So I just want to give people an indication of where rates are right now. And we had a really good, Barry Habib is probably the godfather of all things mortgage rates in terms of just really going into the technical analysis of everything. And right now, if you look at where the 10-year is, you add the average last year was 2.12% over the 10-year Treasury. That's where rates typically fall. So they went through, did all this analysis, Keith, and I'm just going to go through where all the talking heads are stating rates will be this year. Fannie Mae 5.9, NAR 6%, Bright MLS 6.13, Zillow 6.13, Wells Fargo 6.2, National Association Homebuyer 6.2, Realtor.com 6.3, Redfin 6.3, Mortgage Bankers Association 6.4. So the average is 6 to 6.25 is where everyone says.
Where is it right now?
We're literally there right now.
Yeah.
We're at 6.25 now. They're saying this by the end of the year. So I think we're there. We are there right now.
Yeah.
What Barry and MBS Highway says is they anticipate, they think we're going to get to 5.7. Right.
Ooh.
And then the whole conversation, well, did you get to 5.7 by paying a point or paying some discount to get there?
You
Or
can do
is it
that
just,
right now, though.
It's going to take a couple to get that low, but a couple points. But if we could get to 5.7 just straight up,
Par.
no points, wow, that'd be great. Because that means then if you're paying a half or you're paying a point, I just this morning was going back and forth. We're doing a refinance for a gentleman on a VA loan, right, and a big VA loan, so high cost. So you can on a VA loan do 100% cash out refinance, 100%. Right. So his home is worth 7 to 7.25. So he can literally go up to 700,000 cash out, owe 600, pull out $100,000 if you wanted to. Now, once you're over 90% on a VA loan, the rate goes up a little bit. It costs him 40 basis points, so 0.4% of the loan amount more in cost to get that. But the rate's 5.49 right now. So that's incredible. That's a great rate, right? And he's only paying about a half point for that, up to 90%. So
is that better than the conventional rate?
Oh yeah.
Yeah.
Yep. Conventional right now you're 6.25.
Okay.
We're at 5.99. Come talk to,
Sure.
Big K.
Yeah.
It's not. No, it's not. It can be there, but we'll pay for it.
Okay.
Right. So straight up, just straight, no discount, nothing. You're probably low sixes right now.
How big of an impact then a credit score have on that?
Huge.
Yeah.
Yeah. It's really big.
What would be considered a super duper credit score?
760.
So
760.
760 and above.
Yep.
No difference. Okay.
No difference.
And then it kind of tiers down.
Yeah.
From there.
720. You're going to get a little hit again.
Okay. About 720, which used to be considered a really good credit score.
Yeah, you'll be a little bit less than you get in the sixes. And once you're quite honestly in the high sixes for credit score, you're probably looking at FHA because it doesn't have that big of an impact on FHA. And rates are, there's all these companies have so much juice or so much money in government loans. Like you can get a really good rate if the company's being honest with it, you can get a really, really good rate, lower than conventional with FHA.
Okay.
But companies typically have those priced higher to offset conventional to try to drive those prices down. So it's all this game, right? If you think of a scale, there's two sides. One's rate, what's the cost, and you're playing that. So if you want to put some money down, your rate goes down. If
And people play with that all the time because I think the general public doesn't understand really the cost side of it. They just they look at the rate because it's like square footage on a house.
Yep.
They do the simple math. Oh, that costs $250 a square foot. Wow, that's expensive. Okay, I can get you a low cost per square foot in a crappy house if you want.
Yeah, for sure. You also saw us publish just the new 2026 conventional loan limits again, so you don't have to go into jumbo. So the new limit's over 830,000,
which
now.
is unbelievable.
Conventional,
it's unbelievable.
So 3% down, up to 832. Right?
How much really of a delta is there between the conventional rate and a conforming rate, anyhow?
Conventional, those are same. FHA, you mean?
No, conventional versus jumbo.
Oh, eighth quarter, not enough.
Not significant.
Not enough, but you don't have to even get there anymore. You're at 832. On FHA, it moved up as well. So that moved up to 541. So again, you can get FHA really nice and high. So that's good as well. So, and then there's also high cost areas that you can do with FHA.
And those are the loan limits, not the price.
Home value,
home value limit. Yep. So I mean, if you've got 20% down on an $800,000 loan limit, you're buying $1 million house.
Yeah, right.
And conforming.
Yeah. 3% down.
Yeah.
Boy, the rate's gonna be okay. The payment's gonna be outrageous.
It's gonna be a little shocking.
Right?
Yeah.
Shocking. So that's kind of what's going on there. The economic news coming out right now is kind of a mixed bag. I can spin it. Which way do you want me to spin it? Then I'll give you one stat that will spin it like, hey, rates are going down. The other one, rates are going to move up a little bit. Right now, rates are actually trending down nicely. And now they're steady. This week we've had a couple days where it dropped. Like, hey, we're at like 3-year lows right now, which is good.
What are some of the things that would affect rates, one way or the other? What are some of the things?
Unemployment numbers, inflation, and unemployment.
Okay.
Those are the biggest. CPI, right? And jobs reports always have a little impact. But then, as we've talked so many times,
constantly revising.
It's constantly revising. Here's a number, and then small print next month, revised by.
Yeah.
And if that would have been the number up here,
it would have moved in the other direction.
It the other way, right? So it's kind of this gamesmanship that gets played, and it gets played on both sides. So this isn't a political thing. It's played on both sides. So. We're busy. Apps are up, which is great. Refinances. We had a lot of people close at, high 7s, mid 7s, and those people are eligible to get refinanced now. So if you have that, we want to do that. We have a program. We kind of enhanced our Heroes program. So our Heroes program just basically means there's discounts for those people who are we consider heroes. And you're talking police officers, firefighters, EMTs, nurses, teachers, clergy, and we added janitors in there.
Super.
So that's kind of cool to add that in. And then what is the discount? Below market rates, lower closing costs, a 1-0 buy now. You get to kind of choose what fits your scenario. We have a lot of different options we can choose from our Heroes program. So anyway, if you want to have a conversation, give me a call. Kelvin Kamink, Loan Depot, 651-231-2500.
Super duper. Thanks for tuning in this week.